All right, welcome again. My name is Omar Bumayale, and this is my YouTube channel for accounting and CPA professionals. My name is Omar Bumayale, and thank you for joining us again today. I will be speaking to you guys about not-for-profit transfer of assets and other accounting issues. On my channel, we're gonna ponder and we're gonna think about what do people in not-for-profits and their assets do with each other and not for other profit organizations, and how they treat each other within organizations like these. Let's get into the video, dive in deep to these accounting issues and see where it gets us. All right, transfer of assets to not-for-profit accounting or charitable trusts that raises and holds contributions for others. What does that mean? An important issue for not-for-profit accounting and other issues is assets transferred to other not-for-profit accounting organizations, such as foundations, and circumstances under which those transfers should be accounted for, such as contribution liability or change in interest in the net assets. Okay, in this chapter, we're going to talk about things that are financially interrelated and organizations, which means one organization has the ability to influence the other operating and financial decision of the other, or one organization has the economic ongoing interest in the net assets of the others. So we got to watch out for that language of financially interrelated organizations. And in this chapter, we're going to be discussing recipient accounting and what a not-for-profit recipient entity accepts assets from a resource provider and agrees to use the assets on behalf, or transfers the assets to a specified beneficiary. And sometimes they have variance power and sometimes they do not. And whether the recipient is financially interrelated or is not financially interrelated. If we go down a little bit, we will see that some organizations that are not for profit that want to transfer assets are not financially interrelated. That means without variance power. What does that mean? Without variance power and without any financial interrelationship. And those assets are valued at fair value, and it's a liability to the beneficiary, and it's recorded as debit assets and credit refund advance liability. And that's when the liability conditions are the resource provider can change the beneficiary, the conditional, and it can change the beneficiary, and the asset transfer is conditional and or revocable or repayable, or controls the recipient organization and specified unaffiliated beneficiary. Another thing that we can think about for not-for-profit organizations when they transfer assets is, are these organizations, first we talked about financially interrelated, and what about when they're not financially interrelated with variance power? Before we were talking about not financially interrelated without variance power, and now when we have it is with variance power, acts as an agent. It means that it has no benefit, the not-for-profit organization, but does have power over the authority to redirect the assets to another beneficiary. If it's granted variance power, recipient and the beneficiary have no financial interrelationship. Make sense? So first one we talked about was not financially interrelated without variance power, an organization without variance power. What about when we have a organization with variance power? It has no benefit, but it has power, and it's assessed at fair value, and its contribution, it's recorded as debit assets and credit the contribution, expensed when distributed. Okay, what about when a not-for-profit organization is what about when a not-for-profit organization is financially interrelated with or without variance power. When it's financially interrelated, it accepts assets from a resource. Variance power is granted at fair value and is debited asset contribution credit. Okay, another thing in transferring of assets is we have in a not-for-profit is beneficiary accounting, and in beneficiary accounting sometimes we have contribution, beneficial interest, or a change in interest of the net assets. What does that mean? Sometimes there's a receivable and a contribution, and that's when they are not involved in financial interrelationship, and it's debited receivable and credited contribution revenue. And sometimes these beneficiaries are not financially interrelated, and that's when they have a beneficial interest. First one we talked about was receivable and contribution, and that's debited beneficial interest and debited contribution. And sometimes these beneficiaries accounting are financially interrelated, and that means they have an interest in the net assets of the recipient, and it's recorded as debit interest in recipient net asset, credit change in interest in recipient net asset. Okay, if we keep on following along and we come to a new subheading called other accounting issues, and sometimes we run into issues with financial instruments which are at the date of the gift are at fair value usually, and have readily determinable and are measured at fair value in the statements of financial position, the balance sheet. And it's also sometimes known as derivatives, which are financial instruments. They're recorded at fair value, and dividend interest and other incomes. Woo! Okay, so then after that was the first issue, sometimes financial instruments, and then endowment funds are used. Endowment funds are issues because they establish to provide income for the maintenance of not-for-profit entity. So an endowment is maintenance and may be classified either as net asset without donor restriction or net asset with donor restrictions. And these issues come around related to duration of the thing and any restriction, internal, external, and the change of value. And we're going to keep on talking about that as we keep on going along. So duration is the perpetuity or the specified period of time, and the source of the restrictions could come from board designated endowment funds or donor restricted endowment funds. That's the most common. Okay, if we keep on following along, we got accounting and reporting for endowment funds. 1. Net asset with donor restrictions are accounted for under net asset with donor restriction. Net asset without donor restriction are classified as net assets without donor restriction. Okay, specific issues regarding the donor restricted endowments. Their inception date and the return on the endowment asset subject to donor restriction, right? So there's something called an underwater endowment, and that's when the donor restricted endowment fund at fair value is less than the original amount, and those are losses, and you're required to disclose these losses at fair value, the original endowment and deficiencies. And just for the passkey, underwater endowments must disclose how hard it will be for the intended beneficiaries to be fed. Fair value, endowment, the original amount, and deficiency. And the basis, those are need required disclosures, those underwater ones, of all endowment funds. And the basis of the assets are, if there's a fixed asset, you record it at cost. If it's a donated asset, you record it at fair value. And works of arts and historical measures are not depreciated. Again, thank you guys for joining my YouTube video for today on not-for-profit transfer of assets and other accounting issues. I hope I explained some key concepts about beneficiaries and transferring of assets, and financial interrelated organizations without variance power, with variance power, with and without variance power, and how to record the beneficiary accounting, and the issues with the financial instruments, the endowment funds, and their sources of their restrictions, and how you have to report the endowments with donor restrictions and without donor restrictions, and there's specific issues about inception, return of endowment asset to subject to donor restrictions, and what to do with underwater endowments and how to record them. And again, I just wanted you to thank you again for joining our channel, and hope that you guys comment in the below, like my video, and hopefully we get to see you guys again. Thanks again for everything. I love you guys all, and hope you guys are learning a lot from my content and feel confident you're getting closer to the CPA pass point, and you get your career going, and everybody in your direct life will benefit from you, and all that is you who is always expanding your knowledge. Again, thank you guys, and we'll see you next time. GoPro, stop recording.